Hi, I'm Dr. Jim, founder of Probability Trader Pro. I invite you to step into the world of hedge fund quality trading without the hedge fund price. Every day I post a list of high probability stock setups you can trade with confidence. Join me this week and see how simple it is to grow your account with the odds on your side.
The trend is your friend. It's one of the most repeated sayings on Wall Street. If I had a nickel for every time I've heard it in the last 40 years, I'd have a mountain of nickels. But the real question is it true? We put it to the test. Nearly 400,000 trades across 166 stocks, and the results may surprise you. I started by looking at different regimes. Uptrend, downtrend, sideways, transitions. In theory, being in the right regime should tilt the odds in our favor. But when I ran the numbers, the win rates all came out the same. Every regime hovered around 52 to 56%. As a reference, simple random trades, a monkey throwing darts at the dartboard, give us 54%. No matter if you're in an uptrend, downtrend, or sideways, the results are basically random. In short-term trading, regimes gave us no edge. Next, I asked, maybe it's not the regime, but the strength of the trend itself. I measured durations, 5 days, 20 days, 50 days. I measured angles, steep and shallow trends. Then I asked, if you enter during a continuing uptrend, what happens in the next 4 trading days or even 4 weeks? According to the textbooks, you should win 75 to 80% of the time. Sounds great, if it is only true. The actual win rate after 400,000 trades, 54%. That's basically a coin flip, with only a small edge from the market's natural upward drift. And those continuing downtrends, the ones that should keep falling, bounce 56% of the time. The market often did the opposite of what the slogan promised. I didn't stop there. I also tested longer duration, 4 weeks, with stocks like Microsoft. Results ticked up slightly, but still clustered near randomness, about 55 to 59%. Whether 4 days or 4 weeks, simple trend following gave no edge. And here's the important part. My findings line up with those of institutions and academic research. Studies covering tens of thousands of trades found that trend following does work over the long term, but most of the profits come from just a handful of huge outlier winners, not day-to-day signals. Short-term trend rules, the kind that retail traders lean on, are basically random. That's why large funds combine trend with other quantitative methods and risk controls. They know the edge isn't in the slogan, it's in the data. So what does this mean for short-term trading? Over days or even weeks, the market leans towards mean reversion. Sharp rallies fade, sharp sell-offs bounce. What goes up, cools off. What goes down, snaps back. This is why so many traders get burned chasing trends. They're playing by rules that don't actually work. Does this mean trends don't matter? Not at all. They matter for longer-term investors, for understanding context, and for risk management. But for weekly options and short-term swings, regimes and trends aren't your friends. They're just noise. Here's the good news. While regimes and trends failed, our machine learning models told a very different story. When they give a 75% probability or higher, trades actually win 75 to 90% of the time. That's real predictive power. Patterns too complex for the eye to see, but clear to models trained on hundreds of features. So the next time you hear the trend is your friend, you'll know the truth. The market doesn't care about slogans. It only cares about the constant push and pull of fear and greed. And if you'd like to see how I put this kind of research into practice every week, join me at Probability Trader Pro. That's where I share these insights, break down setups, and turn data into real-world trades. Hit subscribe, tap the bell, check the link below, if you want to be part of a community that trades on facts, not fads.